This week on the agenda, shifting gears. Are Trump's tariffs driving the global auto sector down a dead-end street?
China has become the world's largest auto exporter.
$9,200 equivalent U.S. dollars.
Chinese automakers are going to come here eventually, and they're going to do it regardless of if there's a tariff or not.
Amid the storm of tariffs, trade barriers, and escalating tensions between the United States and China, the world has watched closely to see how global corporations would respond. When former U.S. President Donald Trump wielded the trade war as a strategic tool, he anticipated a wave of investment flowing back into the United States. He assumed companies would be intimidated, compelled to return to American soil. Yet, contrary to expectations, the tide has turned. Despite punitive tariffs, major multinational corporations, including Japan's automotive titans like Toyota and Nissan, have increasingly shifted their focus toward China. Far from yielding to pressure, they are now boldly expanding their presence in the Chinese market. What was once thought to be a fear-driven retreat has become a confident march forward into China, not the United States. This shift raises compelling questions. Why did Trump's trade strategy not have the intended effect? What prompted Toyota to abandon further expansion in the U.S. in favor of a multi-billion-dollar investment in Shanghai? And what do these developments mean for the global economy? Let us unpack these events step by step. Since 2018, the Trump administration introduced a wave of tariffs, particularly targeting China, with the aim of safeguarding American manufacturing and encouraging foreign companies to invest in the U.S. In theory, this protectionist approach was to tilt the global balance in America's favor. In practice, however, it had the opposite effect. Rather than returning to America, many companies began seeking alternatives, new markets with fewer constraints. Toyota offers one of the clearest examples. Initially hesitant, Japan's automotive leaders were eventually compelled to make a decision: expand within a politically volatile and expensive U.S., or pivot toward a rapidly growing, state-supported Chinese market. Toyota chose the latter, announcing a $2 billion investment in Shanghai, focused on producing electric vehicles under its luxury Lexus brand. Chinese government incentives, vast market potential, and an accelerating push toward green technologies made the decision a strategic necessity. According to Toyota's leadership, the prospect of tariffs and a trade war was not enough to alter this course. Toyota's move is not an isolated case. In late April, it revealed plans to build a new production facility in Shanghai with an annual capacity of 100,000 vehicles and the creation of 1,000 jobs. This massive project aligns with China's goals of fostering a green economy, and construction is slated to begin in June, with production starting in 2027. In parallel, Toyota also announced a $236 million partnership for a hydrogen fuel cell venture in Sichuan. Meanwhile, Nissan, facing a steep drop in sales in China, is also doubling down on the Chinese market. After selling less than 700,000 vehicles in 2024, half the number achieved 4 years earlier, Nissan unveiled a $1.4 billion investment plan to launch 10 new energy vehicles by 2027. The company hopes this move will reverse its decline and restore its position in Asia's largest automotive market. And it isn't just Japanese firms. German and American corporations, Volkswagen, Siemens, BASF, and even Tesla, continue to invest heavily in China. Volkswagen is pouring $2.5 billion into an innovation center in Hefei, while Tesla is scaling up its gigafactory operations. Siemens is establishing a major logistics hub, and BASF is expanding its production of EV-related materials. Why are global giants turning to China despite trade tensions? The answer lies in China's unique combination of market size, policy incentives, and its dominant role in supply chains. For companies eyeing leadership in the electric vehicle revolution, China is not just an option, it is a centerpiece. China has strategically positioned itself as the global leader in new energy vehicles and EVs, providing financial support, regulatory backing, and infrastructure for both domestic and foreign players. Japanese automakers, with their decades of expertise in hybrid and electric technologies, see this as a perfect match. President Trump's policy hoped to reverse this trend with tariffs and incentives. Yet, instead of drawing companies home, it seems to have driven them deeper into China's embrace. For Japanese companies, Producing in the U.S. means navigating high labor costs, policy unpredictability, and an uncertain future. China, on the other hand, offers scale, support, and access to broader Asian markets. Critics in the U.S. argue that Trump's strategy has backfired. Instead of luring Japanese firms to America, it has reinforced China's position as a global manufacturing hub. Moreover, as Toyota, Nissan, and others plan to export from China to global markets, including Africa, Latin America, and the Middle East, the U.S. risks further marginalization in the global auto supply chain. This shift also carries symbolic weight. Boardrooms across the world are signaling that long-term strategy trumps short-term political pressure. The race is on to secure a foothold in the world's fastest-growing markets, and companies are no longer content to wait and see. They are acting with bold billion-dollar decisions. So what does this all mean? It may well mark a turning point in global trade. Not simply a failure of protectionist policy, but a broader shift in economic gravity from west to east. As global power realigns, those who move decisively now will likely lead the next generation of industrial growth. The question remains, has Trump's trade war truly strengthened America's hand, or has it catalyzed a deeper integration between the world's leading corporations and China? What do you think? Are we witnessing the fall of a protectionist vision, or just another chapter in the evolution of global commerce? Let us know your thoughts in the comments. And don't forget to subscribe to our channel, turn on notifications, and join our live discussion for more insights on the forces reshaping our world. Stay informed and stay ahead.